Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Okay, everyone, how you going? Here we are, the week after the federal election. We now know that the coalition is staying in government, and I could hear property investors right across the nation breathe a big sigh of relief on Saturday night at about 11:30 when Bill Shorten sort of stood up and conceded that he'd called up the Prime Minister and said that he's not winning that one, and coalition stays in for another 3 or so years. So we'll cover this down, and we'll do a big wrap-up at some point around it all, including a bit of a live webcast we have coming up as well, which I'm really looking forward to. So I'm not going to cover it all off now and what it means for property investors. You may have seen some stuff that we pushed out over the weekend around it all, but suffice to say that every property investor I've spoken to thus far since Saturday night is pretty happy and can now sort of proceed with confidence in terms of how they're approaching investing over the period of time without that deadline or the thing hanging over their head that negative gearing will be scrapped as of the 31 of December this year. So press ahead, but that's not what today's about. I've got two people in the studio. Well, someone's been here before, and there's a new entrant, first time on, Melinda and Scott Jennison. You may remember Melinda. We had a chat on the 25th of February this year. We spoke mainly around buying up in Brisbane. These guys are from Streamline Property Buyers. So we're going to have pick their brain, just get a quick snapshot on the election and what it means for them and how Queensland essentially broke it for the Labor Party, and just what they're up to up in Brisbane right now. Melinda and Scott, how you going, guys? You well?
Very well.
So did you guys sort of sit there and eat a takeaway and drink a couple of wines and watch the election sort of unfold on Saturday night? Were you right into it, or you just left it and said, "No, we'll wake up in the morning, see what happens"?
Yeah, for the first time ever, I think we took a very keen interest in what the result was going to be and how it was panning out. So we were there sitting, having a quiet glass of wine, unexpectedly watching it unfold as it did. But we were really pleased to see the result. I think it certainly removes a lot of uncertainty in the market for property investors and home buyers as well. So, yeah, very pleased to see that there's no change and we can continue on as we were.
So I've made the assumption that you guys were sitting together watching as a glass of wine, that you are business partners and also partners in life. So just to cover that off straight away. So how do you guys work? So when you come in, we had a good chat around sort of the strategy and the tactics of your business, Streamline Property Buyers, the work you're doing up in Brisbane, and you've brought in Scott today, so hopefully you can lend something of interest or some sensible commentary about what's going on. How do you guys work together? So it's a buyer's agency business. What bit do you do and what bit do you do, Scott? How does that work?
Well, I'll explain what I do and I'll let Scott explain what he does. So predominantly I work at the front end of the business. So we always, I'll undertake the consultations with all new clients and work with them to define what their strategy is. Certainly, look at it from a macro to a micro approach to determine what suburbs will deliver on the results that they're looking to achieve. Then once we start the property search, and we have a very clear brief, that's when generally we hand over to Scott. We do work that end a little bit together, but Scott generally takes over from there.
Yeah, so I'm a qualified builder. So generally I get my hands dirty, so to speak. Melinda does the front end, and I go out, I do all inspections, do the reports, send that across to Melinda, send it to our clients. And I also on site with building and pest inspections and do all basically the hands-on and inspect it from a builder's point of view.
Okay. And so you go into a property and you look at the bones of it, you look at any issues, concerns about what might affect its capital value. You liaise with pest and building guys. So you don't do that yourself. You do get someone to do the pest and buildings.
Correct. Yeah.
And that will help you shape a price point so you can start negotiating from. Is that when it goes back to you, does it? Or does it stay with you? Or how does that work?
We start to bounce. We bounce around.
Yeah.
And depending on the type of property and the strategy of the client, whether it's for renovations or whether it's for development potential, we sit down then and we start to work together to make sure it suits the strategy for that client.
So there's a few buyers agents either in Brisbane, sort of focus on the Brisbane market, or people from interstate who also have exposure up in Brisbane. Look, I buy in the Brisbane market. I haven't for a little while, but through a buyer's agent. So there's a lot of activity up there. So what sort of sets you guys apart? You're Brisbane based and completely Brisbane centric. That's pretty much the focus for you guys.
Yeah, that's right. I think local knowledge is what sets us apart. So, there's certainly suburbs that we have spoken to some of our clients about because they had a perception in their mind prior to engaging our services about the suburbs that might work for them from an investment perspective. And the feedback that when I asked how did you come across those locations or what made you consider those locations prior to meeting us, and a lot of investors do get some advice or get information from property chat forums and things like that, which is certainly not necessarily the best place to rely on information. But, we are lucky in Brisbane that, or in Queensland, we can secure properties on a conditional basis. And for that particular client, we were able to secure an opportunity for them under a due diligence clause, and they had the opportunity to come up and inspect that property prior to going unconditional. But what we actually encouraged them to do on that visit was to go and visit some of the locations that they'd previously mentioned were options that they were considering prior to engaging our services. And they were really pleased then that they didn't buy in some of the suburbs that they had previously considered. And obviously that's the difference with local knowledge and engaging a professional to act on your behalf.
Can you just fill our listeners in around, I'll just pick you up on around buying on a conditional basis. So this is something, every market it's got a sort of unique nuances which changes the way in which you can buy within it. But within Queensland, you can actually sort of go conditional, and it gives you a period of time where you can actually work out whether or not you want the property. It allows you to control it. Can you just give us a bit of insight into how that works?
Yeah, so a lot of our contracts, unless you're purchasing under auction conditions at an auction, which is not the most common method or the common form of sale in Brisbane, we have the option to purchase a property and place conditions for finance or building and pest, or any conditions, in fact, depending on what the seller's requirements are. So we, as buyer's agents, work with the sales agent to provide an offer that's in the best interest of the seller, but also an offer that protects the interests of our clients. So if a client has a pre-approval for finance, we can still put in a 14-day finance clause whereby a contract is still conditional until such time that we have written approval from the financier. We also have the option to purchase a property before a building and pest inspection is undertaken, and that allows us to either renegotiate on price if issues are found, or negotiate on some of those issues being rectified by the seller prior to going unconditional or prior to settlement. And then at other times we do put in due diligence clauses, which allows us to investigate any scope within, that we're interested in finding out in relation to a property. So in some instances that might involve some advice from civil engineers or surveyors or town planners, depending on what the opportunity is and what the strategy of the client is.
It's a really good tactic. I've used it numerous times, whether it's finance or pest and building. I guess that's when you can get in there, Scott, and sort of work out whether or not the price that you've negotiated on at that point in time is the price that actually settle on. Are you on the tools, or you just look at tools these days? You ever sort of picking up a hammer anymore?
No, definitely not.
How's that feel? All right?
It's good, actually, yeah. No,
so the stuff that you try and identify your clients, are you always looking for that sort of upside potential where you can do a reno, cosmetic, or something a little bit more structural, or knock the whole thing down and develop? Is that sort of your real sweet spot, is it?
Yeah, so there's a bit of both. As Melinda said, with the clauses, due diligence and things like that, we can go in there, and if a building and pest, for example, issues arise on those, I can assist with contacts that we have in the trade still, and we can rectify those. And that also helps not only our buyer but the sellers to make sure it's a smooth transaction and the deal goes through. But also then down the track of the renovations, for example, or a big development, or even splitter blocks, things like that in Brisbane, that's the sort of thing that we can have a look at and really pull the site apart to see whether it suits that type of structure for the client, and it gives them that option to move forward for that next phase of their investment.
It's really powerful having a builder that knows the game on your side when buying properties, particularly sort of anything which is pest and building impacted. You often find that, to fix some termite damage, that a lot of people think if there's termites in a property that don't buy it. If I see termites in a property, I go, hang on a second, here we go, this is a good thing, right? Because the actual cost to rectify or remedy termite damage is often a lot less than what you can negotiate down on a purchase price. How do you, when you're sort of assessing termite damage, I know you use pest and building people to identify it, you can be quite creative and limit how much money you need to spend on rectifying it. Is that right? Yeah,
so I'll also, at the building and pest inspections, I also do my own report, and that's my own independent report, which is just something for the client to have a look at. I can use that with the photos and the report to talk to trades and get them involved with pricing things. So we can generally get most of the items priced beforehand, and that then helps us to negotiate.
And can you look at something and work out pretty quickly that, that's about $1,000 to fix that, it's about $1,000 to fix that? Is that pretty much how it works?
Generally, yeah.
You've been doing it a bit?
Yeah.
Because, I guess residential stuff, if you're buying it, there's nothing too overly complicated unless it's really structurally or load-bearing, right? You can fix most things.
Most things you can, and even some structural. Look, we've had incidents in the past where a house requires underpinning. Even those things, that everything can be fixed. It's just the price tag and whether you can negotiate that price tag out of the deal.
And you use the fact that, you try and negotiate a lot harder on, say it really costs you $2,000 to fix it. You try and negotiate a lot harder than that, won't you, when you're doing that sort of stuff? Is it the secret of the buyer's agent? You're not going to give it away?
Let's not give away all our secrets. But look, we've got good relationships with sales agents. I think at that point when you know that you're, very close to going unconditional, in a lot of instances, it comes down to good negotiating between the buyer's agent and the sales agent to ensure that the deal stays together. And really, it's a numbers game at that point. And we do like to justify and not speculate on build costs. We like to justify build costs through trade quotes and things if something does come up in a building and pest report. But certainly we can use that to our advantage in negotiations. Even some sales agents will bring us properties that may have a previous buyer may have pulled out on the basis of a failed building and pest inspection, and they know because we're not afraid of, rectification works. And for our clients, we certainly have the ability to advise whether something is something that can be repaired for a certain cost and therefore is something that we would consider, or whether it's something that's just not worth considering.
So for people buying in Queensland from interstate, what's some of the sort of common issues you might find with a property that you don't normally get in say, New South Wales, which are just expected to find up in Brizzy? What would there be?
I think one of the main things in Brisbane is we're on a floodplain. So, a lot of people don't think to check flood maps, certainly in cities that aren't impacted by flood. But in our most recent floods, we all know the devastation that has occurred, and it's possible that it could reoccur at some stage in the future. I mean, that's just standard due diligence that we, perform for a client. But on top of that, Brisbane has a lot of character homes. Our council do have certain protections in place for any homes built prior to 1946 that are also protected by what we call a character overlay or a pre-1911 overlay within the council code. Those types of homes have special requirements if you do want to change the front facade, add a set of steps, renovate them depending on the scope of the renovation works. You would actually require a development application to be made to council. So for an investor that's looking to purchase in some of the inner city locations, certainly some of the blue chip suburbs, it's really important for them to understand additional costs associated with any rectification works or any future planned renovations on their property, because an application to council automatically triggers additional expenses, and that's okay as long as you've priced that in up front and you understand that cost may come down the track.
So what's the secret, Scott, to doing a good, cost-effective cosmetic renovation up in Brizzy? Any 2 or 3 sort of things you absolutely need to get right if you're going to sort of tackle these type of things?
Probably being aware of some of the issues, as Melinda said, with things to be aware of. Also in Queensland, we've got a lot of timber homes. So things like lead paint, asbestos, and those types of things that can really add cost on quite quickly, and minimising the amount of structural change. If you can just work with the property, we have a bit of a saying that you can't change the house. You can't change the location, but you can change the house. So it's just working with the body that you've got of the building and trying to change that around to suit the lifestyle that people like to live with as well. And
do you guys like to for character-based stuff, or you being a local, I imagine you like to keep the character of streets and not change things too dramatically?
Yeah, we live at a character home. We're quite close to the CBD, and we do love that Queenslander style. Certainly externally, our home is very character. Internally, we have, changed it to be fairly modern, but, we certainly have an appreciation for the character of our streetscape, and we certainly don't like seeing some buyers who do purchase properties and then demolish everything but the front facade, because, at the end of the day, Brisbane is... the landscape is what it is based on the fact that we do have those Queenslander homes, and we don't want that to disappear.
Would you guys ever touch properties up in Brizzy that sit within sort of flood zones? You just don't go there, or occasionally you might do?
We have not purchased any properties for clients that are in flood zones. It is something that we have an initial discussion about during our strategy session. Ultimately, they are priced at a lower entry point, generally speaking. Some of the areas in flood-prone regions have experienced superior capital growth more recently. However, there is an increased risk for property buyers. Investors have higher premiums generally. Even those that rent those properties, their contents insurance premiums are generally higher as well. So it depends on an investor's risk appetite as to whether they would consider a property that's in a flood-affected area. It's not up to us to say yes or no to whether they, a property in a flood-prone area would be suitable for them. Ultimately, it depends on whether that's something that they would like to consider or not, because it comes down to their risk appetite.
And what do you guys like up in Brisbane at the moment? Anything particular which is really sort of catching your eye? Again, you probably don't want to give too much away, but
where there's in the 2014 city plan in Brisbane, they released a new little tweak where we can now subdivide some smaller 600 square metre blocks of land. There's certain requirements that must be fulfilled in order to qualify a property for that type of subdivision, but a lot of people don't know about that tweak in the city plan, and we're certainly able to, or we have picked up a couple of those types of opportunities for clients just recently. And what that does is it allows clients to lock in the future subdivision potential. Right now, we're sitting in suburbs that are fringe suburbs, so they're right on the edge of some of the blue chip locations, if you like, and they're still achieving yields of around 4.5 to 4.7%, which is, quite a strong yield for an area that is still only 13 to 14 Ks from the CBD. So loving that strategy for clients that are wanting to lock in the future development potential. And for those types of opportunities, we're looking anywhere between $600,000 and $750,000 as an entry point, depending on the location.
And what do you like, Scott, when it comes to these blocks that you can split or subdivide? Are you looking for flat blocks and corner blocks? Is that the sort of holy grail?
Yeah, generally stormwater. Make sure the stormwater can get away from the site.
Okay.
Generally flat sites. You can retain things. Again, that's just something in part of the feasibility when we do the costings on the project in the future. But generally, flat sites, stormwater is quite critical to get it away.
And just sort of basics investing near amenities and shops and schools and all that sort of stuff. That's just given that you're buying in those locations.
And services.
And services.
So things like the practical things of, is there water, is there sewer, and is there power? All those types of things will affect future development, whether it's for that investor or if they sell it to somebody else. Those types of things will really affect the site.
So before you got into this sort of property buying game, you were a commercial or a construction, you ran a construction business. When you look at people sort of dabbling in the Brizzy market who might be looking in this path of splitting blocks and stuff, you probably see a lot of people do it wrong or go bust. What are the key things to avoid if you're going to follow this particular strategy?
Probably just knowing what to look for. It's hard to pinpoint certain things, but just knowing all of the things that could really affect the value of that site. As Melinda said, with flood, council plans, overlays, services, everything, all those things really add up, and the small things can really cost a lot of money.
And for you now, so you do the actual location negotiation, acquisition of a property, but did you actually sort of help people run sort of the development of a splitter block? Is that you get right involved now, do you?
Yeah, we can do. That's a part of the next step of our service that we can offer. Because of the building class licence that I still have at the moment, then we can actually take them down that next step. We can organise development approvals, building approvals, pricing for the build. We don't build ourselves anymore, but we can project manage it because of our licence class, and we can oversee the whole process for the client so that it's a smooth process for them.
So I think a lot of people like the idea of developing, myself included, and I just go, it's too hard. I ain't got the time, bandwidth, skill set to do it. But, it's how do you go about finding someone that can do it for you? I've heard a lot of horror stories of people getting it completely wrong. But, if you're going to go down a path of identifying someone to project manage a development for you, what are you looking for in that person?
Apart from the qualification, some experience.
Yeah.
I think that's the biggest thing.
Some scar tissue, done it before.
You've done it before, you know what to look for, and also contacts in the industry. The more of carpenters, plumbers, electricians, all those trades that you know and those contacts, that really helps when you move forward to pricing things.
How are tradies up in Brizzy? I know, I've tried to get them into my impossible to find. Are they still like rare as hen's teeth, or
They're fairly busy.
Yeah.
But they're generally available.
They're generally available.
Yeah.
If you've got a good contact.
If you've
with
got a
them.
good contact.
And they get paid on time, right?
That's
I'm
right.
sure this is a pretty important thing. So how's Brizzy looking, do you think, sort of moving forward the next sort of year, 5 years? What's your views on this, Melinda?
Well, I'm really optimistic about Brisbane and the market moving forward. We've certainly had a lot of headwinds, as have all property markets. I think now that the Royal Commission is behind us, whilst we still have tight lending, and, that's going to continue into the foreseeable future. I think that now that the federal election is also behind us, that's another thing that was, a fairly significant headwind. I see with the second half of the year coming up, if we have 1 or 2 rate cuts, that will provide further stimulus into the market. Brisbane itself, we've had a 38% reduction in building commencements just in the last 12 months.
Is that much, is it?
It is, it's that much. And, that's huge. We had an oversupply in the unit and apartment market, as you know, more recently. That seems to have been absorbed by the accelerating population growth into the region. That's also positive. We've got vacancy rates now declining in some of those inner city locations.
Okay.
And, generally, if we're looking at the fundamental drivers of property prices, we've got supply that's going to be drying up, but we've got accelerating population growth. If we can see some employment growth and some wages growth, I think that we've got the perfect recipe for upward pressure on prices.
And your clients, are they mainly Brisbane locals, or are they sort of interstate people looking at capitalising on the Brisbane market, which everyone's been talking about for a number of years?
Yeah, we've got a mix of locals and interstate investors that reach out to us. Obviously, those that are interstate are looking for professional advice, and because of our knowledge in Brisbane, we're able to identify opportunities that we feel will suit an investor's individual strategy. So it doesn't always come down to one size fits all with property investing, and it's really important to understand what type of results an investor is looking for, whether it's a capital growth or yield or a good balance of both, and it comes down to their personal goals and what they're trying to achieve, and then we can fit a strategy that works for an investor's personal circumstances.
You're not going to give me all your trade secrets, but can you give us some locations of where you like right now in Brizzy? I don't know how far and wide or deep you go within the market, but anything you like in particular?
We love train line locations. Now, Brisbane is very widespread, as you know, so we don't like all train line locations, but there's blue chip suburbs in Brisbane, and then there's the fringe suburbs just on the outer areas of those blue chip locations. And providing that they're on a train line and they're a fringe suburb, we're certainly looking at those locations right now. So, locals in Brisbane certainly know where those blue chip areas are. We know where there's price disparity between one suburb and the next, and certainly they're the types of opportunities that we're locking in for our clients right now. Last
time we got together and go and listen to it, it was on 25th of February. I think we spoke about the new education precinct, what's the name of the university going in again?
So the University of the Sunshine Coast.
University of Sunshine around Petrie Launton Way.
Correct.
What's going on there? Because I've got a unit block there. So
yeah, there's a lot still happening in that area. So construction is well underway.
Okay.
And there's a lot of, as you know, as we spoke about last time, a lot of the land has been rezoned. We're certainly still finding great opportunities in that region for investors that are in a price point that is under $500,000. And, if we were to categorise investors based on price point alone in Brisbane, that would definitely be our preferred location right now. We're not going Logan or Ipswich in those directions for the simple reason it's all about supply and demand, and the availability of future supply of land in the Moreton Bay region is a lot more limited than it is when you go west towards Ipswich or when you go south towards the Gold Coast.
And how are most properties selling at? Is it by auction or private treaty?
Private treaty.
Private treaty.
Absolutely.
Yeah. Okay. And you sort of run into a whole bunch of other buyers agents looking at the same properties. I imagine they're...
Yeah, we have a really good relationship with agents up in that region right now, and we're certainly getting a lot of off-market opportunities presented to us because off the back of the previous podcast, we did get an influx of interstate investor activity. So we're certainly still helping some of those clients through that process, and there's still some great buying in that area, and we're achieving yields upward of 5%.
That's good.
In areas where capital growth for the last 5 years has been in excess of 5.5 or 6% per annum.
So did you get some phone calls from last time we spoke about people going, You sound like you know what you're doing.
we got a little bit of interest in our
cool.
services, which is wonderful.
Yeah,
and
nice.
We've certainly been able to help some people to date, and we're still talking to a lot of other people. For us, if we can touch on people's lives and steer them in the right direction, even if they're not using our services, then, that's a win for us, because ultimately we're doing what we do because we're really passionate about ensuring people get good advice and making sure people don't make mistakes, because property is such a huge investment, and when people do make a mistake, they can potentially lose a lot of money. So it's all about ensuring people are steered in the right direction, whether they choose to use our services or not. That's entirely up to them.
I think that's a good thing with the buyer's agent community. Everyone is sort of, there's a sort of holistic objective of making sure people are better informed to make decisions whether or not they use a buyer's agent, because a lot of buyer's agents go, well, what are you doing? Why would you do that? And we're a big sort of advocate of that as well. Scott, as you sort of expand the business and get down this path of like broadening out and getting this development game and offering a more sort of holistic service, what sort of key challenges you're having there? Is it sort of finding the people to do it for? Or is it really working out when and where you do that for people?
It's probably, getting the client to start with, and then probably just finding those sites. They are tricky to find, but when you come across good ones, it's actually quite exciting to see the potential in some sites. So it's finding those sites in the right area that will probably stack up for the client down long term.
And that sort of strategy doesn't suit all investors, and I imagine you do that when you do your sort of consultation. If you're a first-time property investor, you probably don't want a development block and get stuck into that, right?
No, that's right. It comes down to
crawl
strategy.
before you walk, or whatever it is.
Yeah. But it also, it doesn't mean that an investor has to actually complete that development themselves. If we're looking at their goals and they have a 10 or 15-year time frame, and, they want to increase their exit options, at the end of that investment period, then certainly we can still discuss that as a strategy, because a developer will always pay more than, a home buyer or an investor will pay. In fact, we just recently picked up a property in a premium location. It did have city views, but it was quite unique in that it was a renovated home.
Okay.
And it was a corner block, which we were immediately identified as having subdivision potential, but where the property was located was such that we didn't need to relocate that property in order to chop off that side block. Now that is real estate gold in terms of Brisbane opportunities. But I ran some numbers for that client because of my research background, and I looked at recent sales of splitter blocks, or those that were 810 or 800 square metres plus in that suburb, what they'd sold for in the last 1 to 2 years, their price point, and then I tracked back to what they'd sold for originally or the previous sale, and then I calculated the capital appreciation on a property basis to work out what the mean and the median were for those that had the splitter block potential. I then did the same for other properties in the same suburb that had no development potential, and the results were quite surprising in that the median result for those that had subdivision potential was a annual capital growth rate of around 7.5%, and those that didn't have subdivision potential, the annual capital growth rate was back down around 4.5%.
Okay.
Even though the growth rate, the median for the suburb was, upward of 5%. So it just goes to show how much more in demand and what impact, having the potential to subdivide can have on a property, even if they are just an investor and not looking to do it themselves.
Yeah, I guess the problem is that everyone wants those blocks, right?
They're in high demand.
They're in high demand. So
absolutely.
you've got to pay a premium for them, but if you've got a long-term objective towards them, whether you do it yourself or sell it to someone else at secondary market, it's really good. Really enjoyed the chat, guys. Thanks for coming down all the way from Busy to have a discussion with us. And
it's been great. Thanks for having us.
Mate, keep in touch. Let us know what's going on. And, as we actually know what's going on after the election, and sort of cabinet's still getting formed right now, we don't yet know who's going to be sitting in a lot of these different ministerial seats. There's potential for a couple of rate cuts coming forward. So hopefully the markets will spark into gear, and everyone's been sitting around, me included, for Brisbane to do a good run. So I'm highly exposed in the Brisbane market, so I'm highly invested in making sure that go and buy in Brisbane quick, hurry up. No, it'll get there. And it's really encouraging to hear that it's been soaked up, a lot of that developments, apartment developments in the city, because that was a big concern for a lot of people in Brizzy moving forward. So I didn't realise, though, there was that much of a sharp fall in new construction development. So anyway, I'll be watching these places, but this is where it comes down to data, which you love, Melinda. So
I do.
Yeah, thanks for coming down. Really enjoyed the chat. Thanks, guys.
Thank you.
Thank you.
Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so you're the first to know what's happening in property and property investment right across Australia, including Brisbane, smartpropertyinvestment.com.au/subscribe. If you're in social media as well, just remember to search Smart Property HQ. And if you like what we're doing with the podcast, just click that subscribe button wherever you're listening to this right now, and you'll make sure you get every new episode as it is uploaded. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.